It is the week of November 3rd, 2025. I'm Tyler Sherven.
And I'm CJ Gettelfinger.
And welcome to today's installment of the Weekly Sift Stack,
where we give you a glimpse of weekly news, upcoming events, and publicly traded companies through fundamental analysis.
Today, we're going to discuss gold's recent slide.
Whose Netflix account are you bumming off of?
An update on inflation and the U.S.-China trade tension timeout.
Let's hop right into it, Tyler.
Alrighty, so lining up with the index returns year to date as of Halloween market close, we're seeing the S&P 500 with dividends reinvested up 17.52%. The Bloomberg U.S. Aggregate Bond Index up 6.8%. We're also seeing gold still way up for this year, almost 54%. And then we got the inflation numbers coming in as of September 30th, 2025. So we're looking at year over year for core inflation that excludes the highly volatile food, energy sectors. Year over year is at 3%, and month over month is at 0.2%. And then we're seeing the CPI index as of September 30th as well, year over year at 3%, and month over month at 0.3%. So just to further dive into particularly gold and the inflation. So we just talked about gold has been going through the roof. So hopefully some of you out there have been going out to the coal mines. It's looking like 1849 again in California. But yeah, going through the roof. But as we've seen, it's had its biggest pullback in years this past week. Progress in the China-U.S. trade tensions and the strengthening U.S. dollar has given pause to some of the biggest runs we've ever seen with gold. And gold has dropped almost 8% since October 20th of this year. As well, we're very happy with the inflation numbers. Inflation came in below economists' expectations and has been pretty consistent, consistently coming down or staying stable. And this is sending the U.S. stocks to even bigger heights. Dow Jones Industrial Average crossed over 47,000 for the first time. So this is giving everybody even more confidence that the Fed is going to go even further with this rate cutting cycle, although Jerome Powell has given some cautionary language on that. But again, the market is still pretty much pricing a couple more rate cuts for this year.
Tyler, we got a good one to talk about today, and that is going to be Netflix. Quick question before we get into it. Tyler, do you have Netflix?
I do have the Netflix.
Do you pay for your own account, or you got the family plan?
I am still bumming off the family.
Me too. Personally, I don't think I've ever paid for it, but it's about as great as a streaming platform as there comes. So what we're going to do for the next few minutes is dive into Netflix. Netflix reported earnings about 2 weeks ago, and overall it was really good sentiment. But there was a 10% cost of doing business tax on the gross sales in Brazil. And that added about a $620 million expense to the balance sheet over the past few years. And that sent the share sliding down about 10%. Where they currently sit, Netflix is down 18% from its all-time highs back earlier this summer. There's two main things, though, we want to talk about Netflix, especially when we look at them as a moat. Netflix is in an industry that is almost entirely moatless, but Netflix themselves actually have a pretty narrow moat. Two of those things being the cash on hand. They have a huge cash position. And then secondly, they're just the pioneer of the industry. They started the industry, they started the streaming platform services, and they've been around the block. So diving in a little bit deeper to both of those things that give them a little bit of that narrow moat is the cash is just going to continue to help them make top of the line credit and keep those subscribers happy. The current cash on hand of the last quarter was over $8 billion. So they've clearly got a lot of room to continue making great content, continue putting out new content every week to keep subscribers happy, to keep them binged on their couches.
They're keeping me happy enough, I'll tell you that.
Hey, you know that commercial? Have you seen that commercial about those couch potatoes? I think
no, but I can be
one
chips. Sometimes. So
I know. I think it was for Lay's chips, but honestly, I feel like Netflix should have been the one to create that. So two other things to talk about. $8 billion. Well, maybe it's hard to rationalize what that means for a streaming or content creating company. Tyler, do you know how much the budget was for Avengers Endgame back in 2019?
2019. I'm going to say roughly $300 million.
Pretty close. $356 million for Avengers Endgame. That's actually a top 10 budget of all time. And if you have that inflation adjusted, that's over $400 million today. So like I said, that's one of the top 10 budgets of all time. And now that's a Hollywood film. So to kind of show you what Netflix has the power of doing, you want to take a guess as to the budget for Stranger Things season 5?
That is a little bit tougher. All right, Stranger Things season 5. I'm gonna throw out there 75 million.
Okay, a little bit off on that one. 480 million for Stranger
Oh
Things
my
season 5.
gosh.
So now you got to take into consideration Endgame's probably about a 3-hour movie. Stranger Things maybe 8 or 9 hours. So obviously a little bit skewed there. But $480 million for a Netflix produced show. I mean, that's just an astronomical number. And that just shows you what $8 billion can really do. So they're definitely never going to be running short of content to be creating. And I can't wait for Stranger Things season 5. Let me just throw that out there.
Hey, with that big budget, yeah, I'm sure it's gonna be
It's gonna be
unlike
crazy.
anything we've ever seen.
Did you see last week that Netflix and AMC made a deal where they're gonna actually be streaming Stranger Things in the AMC theaters?
I did not see that, but
Yeah,
I would definitely go into theaters for that. You know, that
I'm
would
gonna
bring
be
me
there.
in.
I'm gonna be there.
You're already there.
Thanksgiving and Christmas, I'm there. Big bucket of popcorn. Me and 11. I can't wait. Next thing to bode to Netflix's Moat, like I was mentioning, is it's a household name, right? They were the pioneer. They've been around forever. I mean, even my grandfather has it. Tyler, me and you were talking just a few minutes ago. My grandfather was the first person in my family to even have Netflix. He had it back when they would actually send you DVDs. He loved it. So at the end of 2024, Netflix actually stopped releasing their quarterly subscribers. And this has done well for them because they've now been focusing on revenue, not subscriber count. But the last amount of data that we have for a subscriber count came from December 31st of 2024. And at that point, almost a year ago, they had 301 million paying members. So that's just huge. To kind of put that into perspective, Tyler, do you know how many subscribers that Hulu has paying?
That ooh, I thought you were gonna ask me like, hey, what's the population of the United States currently? Because I'm like, hey, that's almost right on with the
It
U.S.
is. It's pretty close.
Hulu. All right, if Netflix is at 300 million, I'm gonna say Hulu's got to be closing in at about 120 million.
They're at 55 million currently.
55.
So only
Okay.
about a sixth. And that's more recent data. Like I said, Netflix's numbers are almost a year old at this point. And another one, this one to me was honestly personally a little bit more surprising. I'll give an asterisk to that Hulu one. So Hulu is only currently in the US. So if you look at Netflix's amount of subscribers in the US, Netflix has 90 million. So still doubling the amount for Hulu nearly. But this one, like I said, was a little bit more surprising to me. Do you know how many Amazon Prime subscribers there are?
200 million.
Spot on.
Yes.
Spot on. I think you may have been cheating on that one.
I'm a big Amazon fan. I'm a big Amazon fan.
200 million, right? So that's a huge number again, but that just kind of puts into perspective. I mean, there's 50% more Netflix subscribers than Amazon Prime. Now, again, I get it. It's a different thing. It's a different service, but that just shows how big that 300 plus million number is for their subscriber count. And again, like I said, they're not focusing on those subscriber numbers like they used to be. And so with that, they've really had a change in the tide. They're heavily pushing towards some of those cheaper monthly subscription options with ads. And I think going down the line, this is actually just going to be a win-win for Netflix and the subscribers. So Netflix currently makes about $11.5 billion in revenue each month from each quarter from its subscriptions. They made about $46 billion for 2025 is the estimate. The ad revenue, however, is projected to be $3.1 billion in 2025. And this is a nearly 100% increase from the $1.6 billion number in 2024. So I think as you go forward and as you potentially see pockets tighten and you see a bigger push on Netflix's end towards some of these ad subscription bases, because like I said, it's a win-win. It's a cheaper monthly purchase for the consumer. But then on Netflix's end, they still are getting that subscription monthly, but they're going to actually generate more revenue from the ads themselves. So I think that you see a pretty big ceiling for the amount of ad revenue that Netflix can start pushing for over the next 5 to 10 years potentially. So to kind of finish this off, this isn't going to be Blockbuster, is it? Blockbuster
Fingers crossed.
Fingers crossed that this won't be Blockbuster. I think to answer that, though, you have to just look at the fundamentals. Substantial revenue growth, net income increases of 240% since 2022, margins continuing to climb, international growth now starting to catch on.
Hmm.
The slowdown for Netflix, it looks unlikely. And to end us off, I would just say if you're looking at this company, Netflix has a beta of about 1.59. So there's obviously a lot of volatility. If you track the stock, you're going to see a lot of big swings, a lot of big price movements. And additionally, last week they announced a 10-for-1 stock split on Friday. So this will go live in the next week or two. So watch for that volatility to continue to play out for Netflix. But long term, I think that Netflix is here to stay. What do you think?
It's here to stay on my TV, my Roku. I'll
Mine
tell you
as well.
that.
Mine as well. Well, Tyler, I'll pass it back over to you. What do you got for us going on in the markets and in the economy this week?
Yes, sir. So taking a look at the weekly insight, again, touching base on the cooling inflation numbers, which we're very happy about. And then also we got the U.S.-China trade tension timeout, which I'm sure is given both of those things are putting people more at ease, right? So inflation, again, as we talked about, is cooled in September. With the CPI rising only 0.3% month over month and 3% year over year. Both of those, again, are below expectations. And then you go, again, beneath the hood with the core prices, excluding food and energy. That climbed just 0.2% month over month. And so this is showing that price pressures are easing across all goods and services, which everybody can get on board with. So CJ, be on the lookout. I'm pretty sure your grocery bill is starting to stabilize a bit more.
I
So,
hope. I hope.
fingers crossed, right? So, with a surprising turn, we've seen China announce plans to suspend its rare earth export. And this is also going to curb investigations into the U.S. Chip firms, easing one of the biggest pressure points in this ongoing trade rivalry, the face-off between Xi and Donald. So think of this as Beijing tapping the brakes on escalation, signaling a more pragmatic tone just as the global supply chains are starting to stabilize. The other thing that we're taking an eye at is that the rare earths, right? They're critical for everything from the EV motors to the AI chips. And this makes it a significant lever of geopolitical power, especially as we're seeing more reliance on AI. And I mean, for a tidbit for you guys out there, we're even seeing governments such as Albania starting to have AI, somewhat of an AI minister. So it's becoming more and more over time ingrained in the things that we do. And so by pausing these restrictions, China is potentially looking to restore confidence in its manufacturing sector and cool investor fears of another tech decoupling spiral. Meanwhile, dropping U.S. chip probes takes some heat off companies caught in the crossfire and giving us a small diplomatic thaw after months of tightening rhetoric. So thankfully, CJ, both you and I, we got a little bit more relief from this trade rivalry. But I hear you got something else coming up for us next with
I
the
do.
flashback, right?
Yes, the flashback today is actually a good one. You know, there's been a lot of push in the news lately about a potential AI bubble. So let's go ahead and throw it back as we should to November 3rd of 1999, where we can party like it's 99, right? Let's get
Oh
to the
yeah.
actual .com bubble. So November 3rd, 1999, the Nasdaq closed above 3,000 for the first time ever. That was a major milestone in the tech-driven equity markets, the late run of the 90s. That had marked 289% growth over the past 6 years. So
Big
if
bucks.
anyone, if you look at where we're at right now, you know, things don't quite look like we're at the .com bubble yet, if you consider where things were at in 99.
We still might have a little time. We'll wait and see,
Yeah,
right?
there's still a little bit of time to run. We'll see about it.
Yep. Keep partying like it's 1999 out there, folks. So next up, we got. I'm sure a lot of you tuned into the World Series over this weekend. Did the Dodgers just become America's team? Two World Series in a row. We have in the World Series, right? The Blue Jays versus the LA Dodgers, Canada's team versus America's team. While we had that going on, Canadian government aired an ad featuring Reagan, President Reagan, criticizing tariffs. And this, of course, as we would all expect, caused a tremendous stir at the White House. We want to know, do you think U.S. and Canadian governments, are they going to just quickly resolve this rift in good time? Do we got faith in our border buddy relationship? Or is it a no? Trump is going to be turning the heat up on this one. So let us know in either the newsletter or the comments. We'd love to hear your feedback on this. And we also want to feature a response from one of our top readers, subscribers to last week's poll question, which was, after the latest pullback, how do you view regional banks? So this reader mentioned about how he's picking only to invest in the biggest names. There's still some growth and dividends to capture. The big names are just simply too big to fail and have gone through strenuous stress testing, and that offers that individual the safety that they're looking for. So always happy to feature one of our readers. And CJ, I heard you got some motivation, some pick-me-up going into this week.
Hey, before we get into this motivation, just two quick things. First, Blue Jays, man, that was a heartbreaker.
It was just inches
brutal to
from
watch.
the home base,
Yeah.
bases loaded.
I mean, when the catcher's his toe lifted up like 1 inch. Oh my goodness. But then secondly, in that response to last week's poll, I'm gonna have to agree, right? I mean, you've seen the markets have a lot of consolidation really recently. We're in a very consolidated market, so I agree with the response there. But to wrap us up for this week, I just want to finish us off with a motivational quote from Netflix's founder Reed Hastings. Companies rarely die from moving too fast, and they frequently die from moving too slowly. So I think that kind of bodes well to a lot of the growth that you've seen Netflix kind of they take over. They entirely change the streaming industry. And I think that they'll continue to adapt. So thank you all for listening. We hope you all enjoy this episode, and we look forward to catching you on next week's episode of the Sift Stack.
This material is for educational purposes only and is not intended to provide specific investment advice or recommendations. Investing involves risk, including loss of principal.